Hey everyone, and welcome to today's Explainer. I'm host A, and I'm here with host B. Today we're diving into an analytical masterclass to really decode the absolute bedrock of our long-term financial system.
That's exactly right. Look, if you've ever wondered how those massive corporate factories actually get built, you're in the right place. We're zeroing in on the role of capital market in India. It is without a doubt the ultimate wealth-building engine.
All right, so here's our roadmap for today. First, defining the capital market. Second, the Great Wealth Bridge. Third, funding the investment boom. Fourth, speed and operational efficiency. And finally, number 5, empowering everyday investors. Let's just jump right in. Okay, Section 1, defining the capital market. Let's establish a clear baseline here.
So to truly grasp the capital market, you kind of have to separate it from the money market. Think of the money market as, well, a temporary parking lot. It's built for lending and borrowing short-term funds, usually for under a year. Highly liquid, basically near money. It's perfect for daily working capital.
Exactly. But the capital market? That's the factory. This is where the actual heavy lifting happens. We're talking about long-term equity and debt that have a really long or even an indefinite maturity period.
Right, so locking in that textbook definition, the capital market is essentially an institutional market for long-term funds. That includes both equity and debt, raised both within and outside the country.
And the reason this matters so much is that our national economic growth literally depends on it. The massive demand we see comes from agriculture, trade, and these huge industries that absolutely require permanent capital, not just some quick short-term loan.
Which brings us to Section 2, the Great Wealth Bridge, connecting those savings.
Okay, so in any economy, you have this classic mismatch. On one side, you've got individual households and banks sitting on all these scattered, idle savings. Then, on the completely opposite side, you have visionary entrepreneurs and massive industrial organizations who are absolutely desperate for investment funds, but they just don't have enough of their own cash to build what they want to build. Hit the nail on the head! And that is exactly where the capital market steps in as this giant institutional bridge. It actively mobilizes those scattered, long-term savings from all across the population and literally funnels them directly into productive corporate investments. Now, this massive bridge doesn't just float in the air, right? It's supported by 4 main institutional pillars. First up, you have the government securities market, which handles super safe, fixed-interest government bonds. Second is the industrial securities market, and that deals with shares and debentures through premier stock exchanges like the BSE and NSA.
Right, and third, we have development financial institutions. They provide the medium and long-term assistance the private sector needs. And finally, the financial intermediaries, like your mutual funds, which act as the vital link connecting everyday investors directly to the borrowers.
Moving on to Section 3, funding the investment boom.
So this market provides something super specific, and that's equity or share capital. When a company issues fresh shares, it's securing permanent funds. Think about that. They don't have to scramble to pay this money back in 6 months like they would with the standard bank loan.
And man, that is incredibly empowering because with permanent funds, entrepreneurs can confidently purchase heavy assets, they can fund massive business operations, scale their reach, and directly drive the economic development of the entire country. It's a total game changer.
Exactly. So when you're supplying long-term funds, you aren't just letting your cash sit idle somewhere. You are basically planting seeds into highly fertile economic ground.
Absolutely. And as the corporate sector expands over the years, those initial seeds compound into serious, long-term wealth. The initial investment grows dynamically right alongside the nation's growing economy.
All right, Section 4, speed and operational efficiency. Now, this brings up a major question. Let's say a factory needs money for 20 years to really reach its maximum value. But what if I, as an everyday investor, need my money back next year to, say, buy a house? Why on earth would I lock my wealth away for 2 decades? Well, that is exactly where the secondary market comes in. Stock exchanges act as continuous, transparent platforms for trading existing securities. So the company keeps its permanent capital to run the factory, but you can sell your shares to another investor instantly. That instant liquidity is what makes people comfortable parting with their long-term wealth in the first place. Right, and this operational efficiency works on 3 really distinct levels. First off, it dramatically lowers transaction costs, which just makes it significantly cheaper to trade. Second, you get simplified procedures. We're talking screen-based trading systems that mean incredibly fast settlement times. And third, quick valuation. You literally have millions of buyers and sellers agreeing on a fair, real-time price for both equity and debt. It perfectly integrates the physical factories in the real world with the financial sector. Which leads us to our final part, Section 5, empowering everyday investors. You know, historically, an everyday saver might have just kept their money stuffed under a mattress, or maybe sitting in a low-yield savings account, where it's slowly but surely losing its purchasing power to inflation.
Yeah, but thanks to an accessible and highly efficient capital market, that same individual is totally empowered now. They can step onto an upward financial trajectory by actually owning slices of the biggest, most profitable companies in the nation. It's incredible.
So just to summarize the sheer power of what we're looking at here, the capital market takes your scattered savings and guarantees a fair, real-time valuation of your assets.
Exactly. It integrates your money with massive institutional funds, giving you the leverage of a huge economic engine. Ultimately, your personal financial wealth gets tied directly to corporate success. Basically, if the nation builds and profits, you build and profit right alongside it.
So, we've seen how scattered cash transforms into the permanent equity that literally builds nations. Consider this. Your savings might be sitting idle right now. How will you use the long-term factory of the capital market to build your financial future?
A great question to leave you with. Thank you so much for joining us in this explainer. Until next time, keep learning and keep building.